Eric Mwathe with Mwathe.com with this weekend's world market analysis for the weekend of May 9th and May 10th, 2015. Let's take a look at markets here. We begin by taking a look here at the US markets with about 2 hours to go before the close. And the markets are called up. The Dow is up 1%. Nasdaq is up also nicely, and so is the S&P 500. And if we take a look at how world markets closed for Friday, we can see that Asian markets were mostly up and nice close to the end of the week. The biggest mover was, of course, in China, up 2.3%. So was Hong Kong, up 1%. The other markets were slightly to the positive or a little bit unchanged. So the charts I'm going to be showing you are going to be reflecting Thursday's close. If we take a look at the European markets at the close of Friday, we can see they also did manage to post a nice close to the week. Nice rebound. Very strong, up about 2% and change, about 2.5% on average as far as the European markets are concerned. As of Friday, we are taking a look at the Brazilian market, which is slightly to the positive. Keep in mind that the Indian market did close up about 1% for Friday's action. Let's begin this weekend analysis of world markets by taking a look at the US market by way of the S&P 500. And most of the charts I'm going to be showing you in this edition is daily charts because they seem to explain the most about what is going on worldwide. If we take a look at the S&P 500, it came back to this line of support, connecting recent lows on the daily RSI. Once it hit that level there, the indication there was that the market was due for a bounce, which is exactly what we are getting. And we are seeing relatively big up day because the daily for the S&P 500 is moving above 50. So that's what it looks like on the daily chart for the SPX. Let's take a look at the Canadian market daily. And we see that right now, in fact, let's go to the weekly for the Canadian market. Two things to consider here. On the weekly, we've been talking about this line of resistance, that the market needs to get above this recent resistance level where it has been stalling. And those who are new to this is ever since we broke down here, we've been going down as far as the Canadian market is concerned. We again would come here and show resistance on the line for this pullback. And again, double bottom or double top resistance there, which was again off the highs here for a shallow pullback. And recently we've come back and we seem to have hit that wall on the weekly RSI, hence the reason week to week why we are down. Now if we go to the daily, which is where most of the support is coming around across the globe, you can take a look at now the daily RSI has come to this line, connecting recent daily RSI lows here, 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 and as the last 2 days we hit that level and are bouncing nicely on Friday. So as long as the daily is showing support, one can expect this market to continue building and rebound as long as the daily RSI continues to hold support where it has been finding support. So for now, looks like a bounce is in play. If we take a look at the Brazilian market daily, we see that ever since it broke out above recent RSI highs, so the once this breakout took place here in April, which was this entry level, since then the market has been trading well. If you extend that same line, you can see the market has been using the same line for bounce. Every time it comes and tests that line, it sees a short-term low here and another short-term low on the line, which was here. So all that is to say that as long as the market is holding above the breakout line on the daily RSI, the Brazilian market should look good and should continue to trade higher. We also see that it broke out above what we had observed as a breakout level last weekend, so it is now trading above 56,594. As long as it's holding above that level, this market continues to look good on the daily charts. Next market up, let's take a look at the French market from a daily view. Remember, the French market was up about 2.5%. So on the daily, and this is Thursday's chart, so this doesn't reflect the close of Friday, but you can see that it had come back to a line of support. If you draw it like that, connecting recent RSI lows on the daily here, and also the line where it began this nice move. So this move here, right there, we can draw a uniformity line, which would be this breakout. So that RSI movement began this nice move. Since then, the market hasn't looked back. It's been trading higher. So we can draw a line from this entry like that. Oh, let me draw that differently. So there's the line of support. The market has used that level of support before. Uniform activity below the green line, back above it for this nice entry on this lows. It came there and touched the same green line, nice lows, and over the last couple of days we've come here, and as of Friday's movement higher, now this market is also showing that it has again found support on that green line. So then again we see another instant where another world market is showing daily support. We take a look at the German market on the DAX, and the DAX daily. You can see that the line I had drawn and has been on my chart for a while, this line is being drawn off the best or recent ideal entry level. This entry level in the German market of those pullback lows has led to a very strong move there. So we draw a line, which is this line here, and that is based off this breakout in the RSI. So that's where the line comes from, and that line makes sense because it began this nice move off the lows. Since then, it's become a bounce with uniform activity, bounce there, it came close, which is those lows, and recently you can see this is quite easily a double bottom, which might explain why we had a strong move on Friday with the market showing double bottom support and now moving about 2.5%. Very strong move because of that daily line support. If we take a look at the FTSE, you can see that on the daily it too did find support. Very simple line connecting the lows like that, and this has been support, and this is a live chart, so this does reflect Friday's move, and you can see up 2.3% at the close, confirming this line of support has been held, and hence the reason why the market bounced off this recent lows. So again, daily charts seem to be where the action is taking place worldwide. If you take a look at Hong Kong on the daily chart, so the Hong Kong market, and you can see that again, daily chart, there was a breakout recently on the RSI. This breakout point was here, and that corresponds with this entry, nice entry in price here for a very strong move higher. So if we extend the same line like that, you can see that the market came here to support or to test the line. So the back test of this line, the market held, and that's why we see that there was a push on Friday after support on the back test. If we take a look at another world market, let's take a look at the KOSPI, and the KOSPI did also come back to a line of support, had a big drop this past couple of days here, big drop, but now we are testing the lows on the daily like that, connecting the lows here, here, and here, and also, so that's one line of support, and also this entry, so that's this entry here in the RSI. We draw a line from there. You can see both of them come and show support right there. So let me take that off and show that again. Alright, so we can see two lines. Line number one is here showing support, that's where it closed on Thursday, and line number two connecting the lows like that. And you can see here the South Korean market had a reason to bounce after support given by those two lines, hence the reason why it is setting up on a daily chart to also bounce. If we take a look at China, which had a big couple of drops this past week, but on the daily not such a big deal. Why? Because we go back to the line of support, this green line here has been support. You can see that it was uniform activity support here for a nice entry of a short-term pullback, uniform activity here with support, short-term lows, and recently we've come back to the same line and we are showing support after Friday's nice move. So again, yes, the market did pull back, but not broken, because it's come back to the daily line and it is showing support, and that's why it is moving higher. If we take a look at the weekly, at the conclusion of this week, we continue seeing that the RSI still continues holding above 69.10, and that is a sign of a strong market. We take a look at the monthly for the Chinese market, and we can see that the RSI also continues trading above 69.10, which is still a sign of strength. And as long as the market is holding above 69.10, we have to be open to the idea that this market continues to be strong, just like it did during this stretch in 2006 and 2007. So as long as the RSI is holding above 69.10, we have to respect the potential for upside even with pullbacks. Let's take a look at Japan on the daily. And if you take a look at the Japanese market on the daily chart, it too had a drop this past week, but we come back to a line of these lows here. So there was a nice low. Anybody who got in here was lucky enough to have had a chance of riding this market to nice highs. And so we can see where that movement began. It was during this RSI break. So that's where the movement began here, and the RSI. So we can use that information for future support, and there you have it. This green line shows you where the market found support previously, which was here for these lows, and a move higher. And over the last couple of days we've come here, and after Friday's close, confirming that this is also another support territory. So if you want to learn more about this, check out my videos on uniformity. If I can spell this correctly here. So uniformity is the principle I use to draw this green line, where you can find future ideal entry levels on any stock or any trading instrument after a pullback. So here again we see another reason why this market looked like it was ready to bounce off that uniformity support line. Let's take a look at another market. Go to Australia, and we can see that it too had a pullback the last couple of days. In fact, a major pullback. I mean, you can see this is a huge drop over the last 2 days or so, Thursday and Wednesday. But now we come and test this ideal entry of these lows, and if you got in here during the lows, you are lucky, because you had a chance of riding all this nice upside. And we can see that this entry here comes from this RSI movement of this level. So the RSI began moving here. We can use that uniformity line for future bounce like that. This is exactly where the market did stop the down move on the daily RSI, and so this makes logical sense that somewhere around here it starts moving higher. So again, most world markets are showing that this is where support is coming around current levels after recent pullbacks. Now let's take a look at the Nigerian market, and we are using the NGE Global Nigeria Index ETF that trades in the US. You can see a breakout recently on this daily chart. That breakout corresponds with this price movement. Ever since then, if we extend the line, the market is holding well above that line. So as long as the market is successfully back testing that line, and as long as it is holding above that line and starts coiling higher, more than likely it is also gonna continue to trade higher. Keep in mind, right now it's trading in a nice narrow wedge. As long as this daily chart is holding and this daily RSI line is holding, eventually the market should break out. The level to watch, I've been saying, is 10.94, because any breakout above that is going to suggest that now momentum is confirmed to the upside. Otherwise, the chart looks to me net to be at least a market that is stabilizing or preparing to go higher, especially if it can take out that 10.94 level. If we take a look at another African market by way of the South African market, we can see that off these lows, the market has had successful movement, hasn't come back to these lows since then, and has gone on to record a nice move. So we can use that information for future bounces by way of the uniformity method. And here it is, just draw a simple line connecting those highs. You can see this is where the RSI movement began corresponding with the lows there. And we just draw a simple line like that. You can see the market has used this with uniform activity once before, which was during these nice lows and a nice move higher. And now after this pullback, we've come back to test that line. It looks like the market is showing that with uniform activity, bounce on the line, which is what the uniformity method is about. And also we seem to be holding above the 50-day moving average. So the recent bounce looks like markets are confirming that they're just coming back to test previous ideal entry points. And as long as we are seeing such type of formation on the daily, world market should be looking to bounce. Now, I need to explain something here briefly. If for some reason the market would come back and break that green line, then we are in a bearish market. But for now, that green line is holding. If we break that at some point, then we can start looking for reasons to be bearish on world markets. Let's take a look at the Russian market by way of the RSX, so the ETF that tracks the Russian market, and we go to the daily, which is our focus this week, and we can see that it continues to trade well but needs to hold and trade up above recent daily closing highs, and the level there is 20.54. So if it can hold above 20.54 with a breakout, that's exactly what the bulls want to see. Right now it looks like it has been resistance this past week. Needs to break out above 20.54 if it's to do well. Also on the daily RSI, it needs to hold above this line, which was the breakout level. So you can, ever since it broke out here, it has been defending this line, and as long as it is holding above this line, just like the Nigerian market, as long as it can stay above this line, eventually it should have enough momentum to take out 20.54. Otherwise, if it drops below the line, which has been the breakout line on the daily RSI, if it breaks below that line, then maybe this breakout will not take place. Let's take a look at the Indian market by way of the Nifty, and just want to show you here that yes, we had a pullback of recent highs. So this has been almost a serious pullback, but now the question is what next? A couple of things that you can see here is this is 18 months daily, because I wanted to show you the movement of the lows in 2014 February, and that movement has been very successful since then. If you went long or you have been in the market since then, you've seen the market record new highs. So this was ideal entry at these lows. So we can use that information for future buy points, and we just need to draw a line like that. It can be one line that can be drawn like that. So let me take off all that data. If you wanted to capture these lows right there, you would have been better served if you went long after this movement in the RSI. So we use that information by drawing a simple line for future bounces, and you can see that the market has shown it came close here for nice entry back into the market after a pullback, uniform activity below the line, back above it for a nice re-entry there. Recently we held below the line, back above it with uniform activity, which was another entry, and over the last couple of days we've shown support here, hence the reason why the market had a nice move on Friday, showing support did take place based on the uniformity line. So that's one view based off this nice entry of February 2014 lows. So the weekly or the daily there is showing support. If I go to a 1 year daily, just want to show you this a little bit better. You can see that if you connect the lows on the daily and extend them, this daily line did find support exactly on the line here, which might explain why we are starting to see some traction in the Indian market. So that's one view on the daily showing that the market is finding support. If we go to the weekly, which has been a little bit problematic, let's go back and take a look at 3 years worth of data, and we can see that off these lows, if you went long there in middle of 2013, the market has rewarded you. So the ideal entry level was during this RSI movement somewhere here. So this entry level here, we can draw a line off that break, something like that. You can see the market has come close to this line. As long as it holds above that line with uniform activity, the market could still be ready to bounce even after recent pullbacks. Now, the one thing I also did mention last weekend was the weekly RSI going back to 2011. So if you take the lows on the weekly RSI, just draw a simple straight line, as simple as it gets. You can see it connects to this low in the middle of 2013 and where we are trading right now. So clearly, if this can be support going into the new week or over the next 1 or 2 weeks, if the market can show support on this line, then that's exactly where you expect this market to move higher. I also talked about the monthly chart, so let's take a look at the monthly. And the monthly had previously broken out, and this breakout on the monthly was this movement here, this breakout early 2014. The market has gone on a straight, almost upward projection there. So if we take and draw a line off this ideal entry like that, I've been saying that as long as the market can find support on this line on the monthly, I would expect the Indian market now to be poised to go higher. So as long as this is holding, as long as the month is positive, this market could still have a chance of moving higher. That's all I have for this weekend. Most of the charts I showed you are daily charts. Otherwise, this is Eric Muathe. Enjoy your weekend again. Good luck, peace, and blessings. Woo! I am out. E-A-C-S.